Okay, folks, welcome. Welcome to Thursday Night Stock Charts Live. This is where we review the potential closing price action of the major stock market averages. And we always preface what we're about to say with one trading day left to go. A lot can happen. A very interesting week in the market, probably one of the more interesting weeks in my career. I went into I forget, when do we cover shorts? We covered shorts a few days ago, and I was not 100% confident that I should have done it, but it was in my gut that I felt that, you know what, I think that they're going to pop this market up higher, despite the fact that these charts do not look good. I was worried that they were just going to take it up higher and break us out to new all-time highs. Why, though? Well, the probability of rate cuts is increasing dramatically. Economic data is mixed with a bias to the bearish side. Atlanta GDP is coming in quite a bit. At one point in time, we're supposed to be growing at over 4%. That's gone now. That's history. No longer exists. So the economy is clearly slowing. So we're in election year, presidential election year, and the incumbent always benefits from the Federal Reserve because the next president does not want they don't want the next president, if the incumbent loses, to be staring at them and saying, okay, you'll stab me in the back. So there were a lot of good reasons why we closed out the position, and thank goodness that we did. We were able to book a profit. And as of yesterday, we began to reshort the market, not on a bet that it's going to collapse, just on a bet that we're going to do a retest. So we're going to talk about that chart. We also shorted NVDA today, and opening position, small position, and we'll go over the whys behind that chart. We're going to talk about the Fed's balance sheet, what happened as of last night, reported today, the Fed's balance sheet, and a whole lot more. So let me share my screen before I forget. First, let us say hello to folks. Franklin, welcome. Another quick, no, it feels like an abbreviated week. Yes, I agree. Mr. Pete, welcome. Owen Keith Thomas, good evening to you, sir. Not receiving any, you should be. I'll check it immediately after this. I think you mentioned this the other day too, Larry. So I will check it. Most certainly you should be. So I will remedy that this evening and I will let you know. Do you have access to the Slack forum at all? Because that's another way to stay in contact, because I don't see you that much in there, but I'll check email notifications. Are you having problems accessing the website at all? Let me know. Danny, welcome. Yeah, but I think, thanks, Frank. I think that Larry has, we had an issue with the membership software. We did an update and a lot of funky stuff happened. So I think that Larry's been affected by that. So we got to get that fixed. A couple other people affected as well. Okay, so let's get to it. Let me share my screen before I forget to do so. And I'm going to begin with a exchange between Janet Yellen and Senator Kennedy out of Louisiana, not a Massachusetts Kennedy, but out of Louisiana. And I'm not going to play the whole thing. I'm just going to play a wee bit.
We're running looks like about a $1.1 trillion deficit. Is that correct?
About 1.6, I believe.
1.6 trillion. I'm sorry. It's even worse than I thought. And that, of course, means that we're spending $1.6 trillion more than we're taking in revenues. Is that right?
That's correct.
Okay. And we're filling the hole by borrowing money. Is that correct?
That's correct.
Now, if you personally were borrowing money, would you rather pay 5.4% interest or 4.4% interest?
The less the better.
Ma'am?
The less the better.
Okay. Then why aren't you doing that with federal borrowing?
Why should people join us on June 13th?
Because the game's changed. There are a bunch of things happening right now.
Well, in federal borrowing, our objective is to issue at least cost over time and not to try to time the market.
Yeah, but you are timing the market. You issued a press release back in November that you were going to try to time the market. I mean, right now, you can issue 3-month treasuries. These are yesterday's yields at roughly 5.
Now, I'm going to pause here. What he's about to talk about is what I always talk about, the yield curve. The yield curve.
0.4%.
Yes.
But you could issue a 10-year treasury note for 4.4% and save, let me finish, and save the taxpayer a lot of money. And then last November, you said, you issued a press release. You said, we're going to start borrowing more short-term debt than we normally would. At the beginning of 2023, our short-term debt was about 15%. And last November, you said, we're going to increase that.
To about,
And now it's about 22, 23%.
correct.
You're costing the taxpayers billions. Why are you doing that?
So, Senator, you say it costs 5.4%. That's what it costs this year.
No, that's what it cost yesterday.
Listen,
Yes,
listen
but-
to this.
When you issue 10-year bonds, you're locking in the 10-year rate over 10 years. And that 10-year rate, the reason that holders of 10-year Treasury bonds are willing to accept a 4.3, 4.4% yield is because when those same individuals could be investing at 5.4%.
Madam Secretary.
No, I'm sorry, I would like
But,
to.
Madam Secretary, that's just, no offense. That's double talk.
It
Here's
isn't double
my
talk
que- I mean,
because
maybe
it
it's
is
my fault.
expected that
Maybe it's my
interest-
fault.
No,
Today, you can borrow for 3 months at 5.4%, but instead you're choosing, strike that. Today, you can borrow for 10 years at 4.4%. Instead, you're choosing to borrow at 5.4%.
market participants believe that.
That makes no sense.
Market participants believe that short-term interest rates will come down, and they will come down to a level substantially
So you are
below
trying to time
the
the market.
current 10-year rate.
You are trying to time the
And
market.
so, no, it isn't a question of timing the market. It's we issue across the curve in a regular and predictable way.
No.
And
You-
the reason
you announced
that
last
paying.
November, you announced last November, I can show you the press release, where you said that we have decided to start issuing an inordinately large amount of short-term debt, didn't you?
We did make an announcement
And
about.
because of the inverted yield curve, that means that you're going to pay more in interest on short-term debt than, say, 10-year debt.
Only for a short time.
Now, that's a fact, okay? You can go.
Okay, so that pretty much gets us to where we want to be. Now, my interpretation of her statements, she uses market participants as a scapegoat, but she's in contact with Jay Powell. And I think that it's either that she's incompetent. I don't think that she's incompetent. I think that she's a leftist. That doesn't necessarily make her completely incompetent. But what I do believe is that she's in the know that yields are going to come down. The question is why? And is that good for the equity markets? Because history has shown us that the very time that the Federal Reserve cuts rates, equities go down. They go down until the Federal Reserve cuts enough to get down to equilibrium, where the markets are satisfied that there's enough liquidity in the marketplace so that they could go back up. So I take her statement that yields are going to be lower longer term as extremely bearish for the equity markets. Short term, the anticipation of that rate cut can cause equities to move up higher. Will not argue that. The problem is when they drop the hammer and they cut rates. So I wanted to share that because either she's nefarious or she's in the know about something that this economy is not doing well. And we kind of already know that, right? We have the yield curve that's inverted. That's telling you a million reasons as to why the economy is not doing well. It's a perfect picture. And we're going to go over that in a minute. TZ Burton, welcome. Okay, so let's talk about the economic data this week. A mixed bag. Actually two areas. No, I scratched that. One area that was bullish was S&P, ISM, S&P. ISM unexpectedly surges out of contraction, prints at 53.8. For the longest time now, we've been down below 49, which is a sign of contraction. Excuse me, below 50 is a sign of contraction. Now, it appears as though that we are now back into expansion on ISM. The markets didn't really love this all that much. Actually, I'm sorry, they did like this. What they didn't like was the fact that you had ADP come out very, very weak, unexpectedly tumbles to the lowest since January as wage growth continues. So this is a major, major problem, and we're going to get more data tomorrow, the Pimp Mac Daddy of them all, which is non-farm payrolls. And today we got initial jobless claims, which spiked up higher. Continuing jobless claims continue to grow. So you're seeing jobless claims on the U6 and the U3. We're going to get both of those reports, new ones tomorrow, hook up. That is not good. It's very, very bad. The equity markets like bad news because that forces the hand of the Federal Reserve. What they don't like is unemployment. They don't like people losing their jobs because people can't buy. Let's move on, and we're going to talk about this a little bit more, but let's talk about how expensive the market is. You know, I could sit here all night long and tell you my reasons as to why I think that the equity markets should go down. I have 1,000 reasons why. Incompetence in Washington, incompetence in local government, just sheer incompetence, the debt, whatever you want to throw at this market, it doesn't matter. It simply doesn't matter. The markets will continue until they don't. I traded 2,000, and believe me, you think that this is a parabolic blow off top now? You ain't seen nothing. Back then, it was unbelievable, unbelievable. Way more overvalued than where we're at right now. So the Buffett indicator, we remain very, very overvalued. We remain 2 standard deviations beyond historical norm. And we've only been there a few times in history. 2021 was the last time. Before that, 2000. Before that, 1967. So while we put long trades on, we bought Tesla. I bought Tesla this week for the first time in I don't know how long. We did it the other day. We're up on the trade because it looks like it's breaking out. But I think we're going to get sector rotation. More to come on that. More about valuations of the equity market. Shiller PE ratio, we're now at 35 on the Shiller PE ratio. Here we were back in 2000. We were above 40 back then. If you don't think that we can't go back up there or even to the peak of 2021, you're mistaken. We can. It's been done. Precedence has been set. So I'll go to the reasons why I reshorted the market, or the Qs anyway, in a moment. The Federal Reserve's balance sheet continues to decline, and this is reported as of last night. It's dropping like a rock. They continue to roll off debt off their balance sheet, and this goes back to what I always say about the Federal Reserve. Don't listen to what they say, watch what they do. In his last press conference, he stated, no, he didn't promise, he stated that he was going to unload $37 billion less debt off their balance sheet, which would be bullish for the bond market. Yet, all we're doing is dropping like a cliff. I mean, dropping like a rock. I mean, this is, what was our last report? May the 29th? 7,284 billion. So in 1 week, he dropped about $30 billion off the balance sheet. About $30 billion. 1 week. So what's going on? What's going on out there? So the ECB came out today and they cut rates for the first time since 2019. Pre-commit not to a particular rate path. So they don't want to get the markets excited that there's going to be a new regime out there of cutting rates. You could bet your bottom dollar, if and when we cut rates here, that's exactly what Jay Powell is going to say. What other country out there is cutting rates? Well, nobody's talking about Canada cut rates as well. Not a big economy, but it's a neighbor. Nobody's talking about it. G7 country. They cut by a quarter basis point. And here's a statement. Reasonable to expect further cuts if inflation eases. Why the Fed will pull first cut to July from September. I don't think that's going to happen. Could be wrong, but I don't think it's going to happen. I'll go to it in a moment. And the reason is, drum roll please, Atlanta Federal Reserve Q2 GDP plunges to 1.8% from 2.7% on May the 31st and 4.1%. I've been quoting this for two weeks ago. We were at 4.1%. Now we're down to 1.8%. So the picture is beginning to develop. Jobless claims are building. GDP growth is slowing. Will they go in July? I highly doubt it, because the probability, we need to refresh this because it changes frequently. July was at about 20% probability, which was up from a couple of days ago. Now we're at 21.5. It's still not in the market participants' playbook that they're going to be cutting rates in July. What appears to be solidifying as the month is September. 69.4% probability of an ease in September, and they're pricing in additional cuts in November at 81% now, and December at nearly 95% probability of a cut. So I view the next couple of months between now and September as being probably a quiet melt up in the markets. We're going to have a summer lull, as we normally do. That doesn't mean equities can't move up higher, but they go up on very, very thin volume. But let's face it, they've been going up on very, very thin volume. So I think it's very, very possible. Now, other things out there that should be very, very concerning, we already covered this, is the war drums are beating on the tom-toms. if you take a look at the headlines coming out about direct attacks now on Russia, using equipment from NATO, Denmark and the Netherlands has now given the okay for Ukraine to have direct strikes inside Russia using their F-16s, their fighter jets. So now we have Russian war ships steam into the Caribbean as Ukraine tensions go global. This is getting wider. The neocons in Washington and in the EU, they know that Ukraine is gone. It's a lost cause, and they need to save face. They're not bright people. These are not bright people. They live in a I don't call them this, but they like to be called the elite. They believe that they are the enlightened ones, the elitists, and they live in that bubble and they speak to nobody outside that bubble. And they are ignorant and arrogant at the same time, which is a horrible, horrible mix, because they are poking a bear. So this continues on with U.S. ramps up rate of Ukraine arms package. We just passed, another 50 billion, if not more, for Ukraine? Now, where's those money going? Another 225 million. This is also right in their backyard. NATO kicks off massive Baltic drills. This is their backyard. As Biden affirms U.S. weapons now being used inside Russia. Ukraine uses U.S. weapons to strike inside Russia, according to a Western official. These are acts of war. Could you imagine if Mexico was getting armed by the Russians and they were lobbing missiles or flying jets into California, Texas, and bombing them, killing people, blowing up infrastructure? How long would it take before we went to war? So this is only getting worse, and I can only hope that we have an election that goes to someone that has some common sense and could put a stop to this madness, because the current neocon regime, and I don't mean just the president, I'm talking about the administrative state, they are going to get us all killed if they have their way. Not your daddy's market. S&P 500 at all-time highs with less than 50% of its components above their 50-day moving averages. So the breadth of the market today is pretty poor. Bear's breath stinks and is getting worse from high to high caution. Bulls, what if a broadened market catches up, melt up? I think Sven makes a great point here. I'm of this mind. I am of this. This is why I was short only a few days ago. And then I switched to this mindset of, what if they break this out? What if they broaden it out? And if you take a look at the market watch heat map, look at what was down today. NVDA, chips were down. They've been leadership names. Apple's been a leader of late. It's almost at new all-time highs. What was up? Microsoft, Google, great day. Amazon, great day. Tesla, which we're long of, great day today. So you saw rotation into names that haven't been leaders, especially Tesla, in quite some time. But the setup on Tesla is looking very, very interesting. So that's why we're long there. So where else we're looking for? That's the NASDAQ 100. What we're looking for is a broader rally. You've been seeing pharma do better lately. Retail, discretionary broke out today. With NVIDIA down, consumer discretionary, a consumer that's broke out today. Why? declining yields are being forecasted into the market. Let's talk about NVIDIA for a moment. So I remember this headline. This is NVIDIA versus Cisco. How are we looking? There were two headlines back in 2000. This is one of them. John Chambers, Cisco Systems. For those that aren't aware, you know the symbol maybe, but back in 2000, the late 90s, 2000, Cisco Systems was the NVIDIA. There was no other company that could really touch Cisco Systems, maybe Microsoft, but Cisco Systems was the gem. They were building the routers to allow the internet to get built out. So John Chambers was, I believe he was a South Carolinian. He always had that drawl. He was always on CNBC, had that drawl, gentlemanly drawl. Seemed like a nice guy. Great CEO. And this is one headline, Cisco. John Chambers, the new plan to rule the internet. There was another one that came out right before the bubble burst. And I think it was Business Week. And it said, same picture, very similar picture. Is John Chambers simply the best CEO ever? Then the market crashed. So here we are today, and we have the CEO of NVIDIA. Forgive me, I don't even know his name. I should know his name. And now he's getting tattoos of NVIDIA. And he's getting what he should get. He's doing a great job. He's being honored. But look at these two charts. Tell me that they are not eerily reminiscent of one another. So I found this after I put on my short trade on NVIDIA, and we'll go through the reasons why I entered the short trade on it. And I'm not betting on a crash here, not yet anyway. And we'll talk about when we're going to be betting on a crash in a moment when we go over the weekly charts. But first, let's talk about NVIDIA. Now, NVIDIA, I put up, this is a monthly chart. I put up this ascending line, this rising uptrend channel line, a resistance level, if you will. And we had backed off it many, many times. Here. This time around, we blew right through it. Not only that, we're up on the month already another 10.5%. Normally, what happens when you get these ascending wedge formations is that you hit the upper band of resistance, you back down to the lower band of resistance, and you continue doing that until this gets resolved to the downside. That is not always the case. Sometimes, as you see with descending wedge formations, you get a parabolic move. Whereas in this case, we broke out and closed above that upper band of resistance. We could stay there for a while, but not a long while. In all probability, there is going to be a reversion to the mean. And the same holds true if we would have just, if this were a descending wedge formation and we broke down below that lower band of support at the apex, and you expect the rubber band effects. It's going to revert to the mean eventually. This is a reversion to the mean trade. Simple as that. I'm not betting on a crash a la Cisco Systems. It's just a bet, scalp, if you will. So let's dig down further. Now that we know on a macro view that we have the price action, which has just simply gone parabolic, we have sentiment overly bullish, we have RSI, to get more technical, at nearly 87 on a monthly chart. ADX line is above 60. Any read above 55 is very, very overbought. I won't talk about volume because volume this month, it's still early in the month, yet we're up 10% in a single month. Now look at last month's up move. That was on below average volume. And we moved up, what, 20% last month? Weekly view. On a weekly time frame, we have RSI at 82. We have NVIDIA which is touching the upper band of, or it touched and backed off the third standard deviation Bollinger Band in red. If you're not familiar with what that is, I'll keep it simple. We're not supposed to be there, or NVIDIA is not supposed to be there. This is a classic reversion to the mean trade, possibly down to this rising 20-period moving average. Now, the last time we did this was back here, March of 2024, pulled back roughly to around the 20-period moving average. Let's make this the EMA. I bet you that's the EMA. I have the SMA up. Make that orange. Let's see if that's accurate. Pretty much right there. So on a weekly time frame, this is why we are bearish on NVIDIA. And this is just the first leg of our trade. We'll add more if we're right. If we're wrong, we won't. Daily chart. So on a daily chart, this is what kind of got me. I use the daily chart for trades like this as my signal. You had a new higher high on the day. We know that we're at parabolic levels on a weekly chart and on a monthly chart. And then today on an up day, which should have been somewhat bullish news, ECB rate cuts, yada, 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 NVIDIA closed down, reversed. It made a new all-time record high today, but it reversed. And it couldn't hold it. Momentum on a daily time frame, very, very overbought. And another thing that I noticed was that what we're doing is we had a lower high on RSI. So we're making new all-time highs, yet relative strength is making lower highs. So that's why I initiated the new position. Now, if you want to get more granular on this, how do I think it closed today? Let's go to a 30-minute view. I think that it closed fairly well, bullishly, if you will. Not bad. Can we rally up further? Yeah. Can we break out to new all-time highs? You bet. But I'll only add to this if we break down below these lows here. I want to see a confirmation breakdown on NVIDIA. Unfortunately, if we don't get a broader market participation by other sectors, that could take down the entire market. Let's go to the weekly charts. Jody, welcome. Talon, hey, brother. Okay. Let's begin with the yield curve. So I mentioned earlier that we're going to be loaded for bear. We have plenty of cash. If and when the time comes to short the market. What am I looking for? I'm looking for the yield curve to steepen. So what's it doing this week? After a bullish week last week, we're pulling back. One trading day left to go. A lot can happen here. But right now, it's saying sit on your hands. This is not necessarily bullish for the market, the fact that we have an inverted yield curve, but the fact that we are not steepening keeps stocks from going down. Now, this chart kind of surprised me. This is the CRB commodity index. And for the longest time, this has been moving up. This is a basket of what you might imagine being commodities. And you can see here that we did a massive reversal last week. This week, a new lower low. So we're seeing some stalling in the commodities space. What do we read into that? A possibility or probability of the economy slowing down, demand slowing down. And that could help with inflation moving forward. Not could help, it will help. Yields, they're breaking down. One trading day left to go. Now, remember what Yellen said. She's expecting lower yields. This is only 2 days ago. And we're breaking down. Why would we be breaking down on yields? The government is spending $1.6 trillion more each year than tax revenues that are coming in. So we're doing deficit spending. Inflation is nowhere near the 2% Fed target, yet yields are coming down. What's wrong with that picture? It's you got to read between the lines. The economy is slowing, as the Atlanta Federal Reserve now finally admits. Bitcoin, what's Bitcoin doing? Wow. $3,000 up on the week. Nice. TLT, Talon's favorite here. Bullish week, up 3%. Could we have a new bull market in bonds? Maybe, because we were talking about the quarterly chart this time last week and how it had stopped. We'll go to that in a moment. How it had stopped going down. Here's the quarterly view. Do I have a save version? Yeah, quarterly chart. We're possibly putting in higher lows. So could this bear market be over for bonds? Quite possibly, unless we default. Tips, weekly chart. Clearly, tip investors are saying we are worried about inflation. Have no doubt we are worried about inflation. We want tips. We want our cash protected. The dollar. The dollar is breaking down. This is good for our gold positions, our silver positions. Now we have palladium as well. Very, very bullish stuff here if the dollar breaks down, because those are stores of value. Those names today did very, very well, at least the gold mining stocks. Gold was up. Silver, I believe, was up as well. So we love those names. We will be sticking with them. Euro. Why is the dollar going down? Euro is breaking out. We've been talking about this for weeks now. We've also been talking about the yen. Once you get euro and yen moving up together, the dollar's got to go down. There is no alternative. It's got to go down. Both of these are beginning to move up higher. The euro's already begun. And think about this. Think about this. The euro was up today on a day that the ECB cut rates. Think about it. So if they cut rates and the euro closed up on the day, guess where the path of least resistance is? It's to the upside. Let's just check in quickly on how European stocks responded today. No, that's thinly traded. Hold on. Let me have the iShares. Yeah. This is what I want. Okay. So they cut rates and equities over in Europe rallied. Okay. Yen we covered. Volatility, bearish key reversal. This keeps me bullish on the equity markets. So we're shorting the Qs because the Qs are so overbought. The VIX is down because it trades inversely of the S&P 500. So if we get a broadening out of the rest of the S&P 500 beyond 5 stocks, then we can get a decent rally, taking this market up to new all-time highs until they start doing rate cuts because they're panicking about something. Dow Transports down on the week, but off the lows of the week. Let's go to a daily chart here. Trying to break out higher low. As a matter of fact, this is a bearish day today. Yesterday, we had recaptured support. Today, we gave it back up. That's a breakout point failure. Dow Jones Industrial Average holding this lower band of what appears to be an ascending uptrend channel. Can it break out above this upper band of resistance? If it does, we're coming up to about 41,000 on the Dow Jones. And remember, manufacturing beat. We are now in expansion on manufacturing. So you would expect that the Dow Jones Industrial Average would move up higher in anticipation of more growth. So if the Dow moves up higher, well, that could take at least a portion of the S&P 500 along with it. Now, here's the S&P 500 up on the week, 1.37%, all good stuff. The problem is that we're doing a retest or a check back to what was prior support is now resistance. Now, this is where the melt-up can begin. This was a melt-up. How do we know that? There was no volume. There was no volume whatsoever in terms of institutional demand. This is all computers, retail investors, and day traders. Short squeezes. That's it. So this can continue. Trip Qs. Thank God we covered here. Up 2.78%. Look at this volume bar on the week. We're up 2.78%. We're not even 50% of the average monthly volume on a weekly time frame. What does that tell you about institutional demand for equities? Well, Warren Buffett's sitting on the biggest hoard of cash he's ever sat on before. He's not buying anything. Let's go to a daily chart here, and we'll talk about what I'm looking for out of my short. So we covered, I think, either here or here. What are these 2 days? And we broke out. So I'm looking for a retest back down to 460, perhaps an overshoot down to around 456, maybe. Then I'm out of that short. When do I rebuild on that short? I'll rebuild upon it if either A, we develop another ascending wedge formation, get overbought, we'll begin bear operations again, or if I book profits on my short down here, and let's say I'm wrong, maybe I book profits too soon, and we break down below this lower band of support, then I reshort yet again. And then I look to add more aggressively. If we take out the lows of May, look out below, 443.05. We break down below that level, then you know that this market is in big, big trouble. So I'm betting more on a short-term retest of support for the S&P 500 and for the triple Qs. If we do move up higher, meaning the S&P 500, I think it's going to be due to the fact that you have a broadening out of market participants that are still trading down below their 50-day moving average. If those stocks begin to move up beyond their 50-day moving averages, you're going to see a lot of value money come into this market and begin to buy those stocks. And that could cause this S&P 500 to move up higher. The triple Qs will lag for a change. Small caps, weekly view. I got stopped out of the small caps, very small loss, but they didn't behave the way we wanted them to. So we were out last week. Let's go to the daily chart. This is a leverage product. Don't I have a saved version of this? Stockcharts.com is completely falling apart. How they sort their symbols now it's so random. You can't find symbols anymore that you saved. Let's go to the daily chart. I'll have to redraw it. I have to keep redrawing charts. I should be using TrendSpider. So we bought the anticipation of the breakout, and that breakout failed. We're still flagging out here. Maybe we'll get a breakout. I'm not going to buy until we get that breakout and a retest, because perhaps the small caps can move up higher. Technology as a whole, the XLK looking really, really good on the week. This is a bullish key reversal bar. If you're not familiar with the terminology I'm using, I have a 5-part video tutorial. My top 5 favorite candlestick patterns, free, linked below. Take advantage of it if you're watching this on Facebook, not Facebook, YouTube, and on Twitter in my link tree above. So technology looking good. Semis looking good. They're up 5% on the week. How's volume? Horrible. Biotechs really looking good here. No volume though, but looking good nonetheless. Consumer staples. They've been in fuego. Our Philip Morris. Love our Philip Morris. It takes really good care of us. Dividend, ex-dividend date is on 6/14. 6/14, over an 8% dividend. So try to do a dividend capture. Daily chart of consumer staples, very close to breaking out to new all-time highs. Now, this was a surprising one to me, but I think it has all to do with declining yields. Consumer discretionaries. Triangle formation. It looks as though we are getting to break out on a weekly time frame. You take a look at this on a daily chart. Look at this, RSI already broken out. So you have an indicator leading price performance. This happens frequently. Daily chart. There's your breakout. Discretionary names of all sectors breaking out. Emerging markets. They too will break out if the dollar drops. Got to be involved with the emerging markets. Energy. We bought energy, and just like the small caps did not treat us well, treat us good. We're down slightly on the trade. We're holding in there. I see no reason to go buying energy right now. I would wait for the breakout. Good day today, but good is not good enough. Volume is lackluster. Crude prices. This is why I'm not a bull on crude prices. Oil is down. They're highly, highly correlated. Now, what we need to identify is the fact that we are trading at the lower band of a wedge formation, a biased ascending wedge formation. We're at that lower band. If there's any time to buy oil from a risk-reward perspective, it's now. Why is that? Well, you can see that we were trading down below this dotted blue line, which represents now a multi-year consolidation on oil, and we rallied back. Now, if you buy oil now, you know that you had better put a stop loss right below the lows of the week, get out with a small loss. And if you're right on the trade, well, then you have a ton of upside potential here. So it's a great trade if you're bullish on oil to put it on now. One trading day left to go. Daily chart. We spoke about this a few days ago with members on Market Wrap. We had a descending wedge formation. This was going to get resolved to the upside. Sure enough, it did. Does this continue? I don't know. It's pretty easy to call these trades and swing trade them, at least for a scalp. That's it. After this pressure is taken off of this descending wedge formation, it's anyone's play of which way this is going to go. But remember the weekly chart. We bounced off the lower band of support. Do we close above that support? If you're going to enter oil, you got to use a stop right below this week's lows. If we break down below this week's lows, we're going a lot lower on oil, whether it be this week or next week. Gasoline prices. Remember the CRB commodity index we started off with? Oil pulling back, gasoline pulling back. Let's check out food. We'll go to DBA. Very good. I haven't looked at this in a while. I'm not surprised. Soybean oil, that was all up today. We sold puts today on lean hogs. I've been playing in the futures market, learning about how to still be able to sell puts, but in uncorrelated assets relative to the S&P 500. I want to be a lot more diverse because I'm worried about the ultimate or the inevitable here. We're going to get a nasty correction. So I want to be in the futures market diversified just so when it hits, I have uncorrelated assets that I'm trading that may probably still get hit, but not as much as the S&P 500. So that's what we're doing that. So yeah, I put on lean hogs today. Got a pretty decent premium on it too. Oil, natural gas, this is going up. This wants to go up. Natural gas bullish. Gold. I got to tell you, one trading day left to go. But man, this time last week, I thought we were going down. Nice reversal week. Again, one trading day left to go. I need to see volume. We don't have it here. Let's go to the daily view. Great breakout today. Really, really good breakout. Higher lows on Stokes. Mining stocks, GDXJ, these are the junior miners, bullish key reversal. They want to go up. Nugget, senior miners, leverage product, bullish key reversal. I may be buying more here. Silver, weekly chart, bullish key reversal. What are the tip markets and the commodity markets telling you, at least in precious metals? There's inflation. What the industrial metals are telling you and energy are telling you, at least oil, is telling you that we're probably going into recession. But that just means that we're in a stagflationary environment where inflation is going up. Either the economy is stagnant or is in recession, but nothing does better. The best petri dish in the world for gold, stagflation. And that goes for silver as well. How much time do we have here? Let's do some chart requests. I've talked enough. Oh. Let's bring up our good friends over at TrendSpider. So let me check. If anybody's got a couple of stocks they want me to take a look at, symbols, let me know. Okay, let me go to the members area. I should have this ready before I go live. I always forget. Larry, I didn't forget about you. I'm still thinking about you if you're still out there. Okay. All right. Jeff, NVDS. Oh, this is an old one. We'll go over it anyway. I think I just bought this. This is the one I bought today. Yeah, I bought this. All right. So bear product for NVIDIA. So here's what I'm looking at here. Weekly chart. What do I see automatically? Descending wedge formation. And the inverse is true for NVIDIA. So I think that we're going to get a rally, pull back in NVIDIA in the coming days, weeks. Stokes are like a coiled spring, and the inverse is going to be true for NVIDIA. It's in an ascending wedge formation. It's gone parabolic. And I think that we're going to pull back. So NVDS, I bought it today, so therefore I'm bullish. Let's go to a daily chart. And why did I buy this product? To short NVIDIA ties up too much capital. To buy the options, it's too much capital. So I just bought. I'm not a big raging bear on NVIDIA, so I didn't want to tie up too much capital, so I bought a leveraged product. NVDS. I want a daily chart. All right, so the daily chart, very, very good price action today. on volume. All right, one of the few charts that we looked at tonight where you had volume, and that was in a short product for NVIDIA. All right. Disaffected Canadian. How you doing, brother? PLTR. My father loves this stock. I think it's going up. At current, on a monthly time frame, we have a breakout, but we're only a couple of days into the month, so be careful, a few days into the month. So I wouldn't buy based upon the breakout on the month. Way too much time to go. But it's stair-stepping higher. I think this is going to get resolved to the upside. Weekly view. I'm a buyer here on a retest next week. I'm not a buyer right now. If we get a successful retest, we're good to go. Okay, daily chart. Nice breakout today, but again, I think you need to check back either ideally next week, to be honest with you. I want to see that weekly check back, retest, PayPal. Wow, PayPal moving now. This thing has been dead money for a while. Where's the revenues? I forget how to put it on here, but their revenue growth is rising. So PayPal monthly time frame. It's moving up higher. I like this play a lot. We're in a ascending triangle formation. I'm liking it quite a bit. Higher lows now. We're still technically in a bear market, but I'd be a buyer here. Weekly chart, we're breaking out higher lows on stochastics, higher lows on RSI daily chart. I would want to see a retest of this fractal support line. Let's call it at around $66 a share. If it holds that level, I'm a buyer longer term, because this monthly chart is telling you that we have a multi-year now consolidation on PayPal. And we also have, and this is quite interesting, is that if you'll notice, we have the Bollinger Bands in black, trading within now the Keltner channels on a monthly time frame. Now, this could stay like this for another few months, but this is extremely bullish. Now we're trading above VWAP. Weekly view. Do we have a weekly squeeze setting up here? We do. Bollinger Bands trading within the Keltner channels. I think it's a buy. I think it's a buy. Thank you, Franken. Appreciate it. We'll do two more, Shell and GME for Jody. All right, so on this chart here, this is a monthly chart, And with Jody, you know this, but for everybody else, I am using a monthly chart, but I have overlaid here quarterly support and resistance. These support and resistance lines are in dashed line. So we're looking at monthly uptrend, and we have a quarterly support level immediately below. We need to hold this level, and that level is at current at $70. Weekly view. RSI going the wrong direction. I'm not a buyer here. Not yet. You know, if they consolidate this, along this quarterly support level and they try to drop it down and it keeps popping back up, then I'm a buyer. Right now, it's been rejected at this fractal resistance level. It's trying to hold quarterly support. We're kind of in no man's land. So I think it's a little bit too early to put money to work here. Let's go to a daily chart. Maybe could be convinced the opposite. No. This to me looks like a bear flag setup. I'm not a buyer here. I would avoid. I would watch it. Last one, GME. Oh, I bought what the heck is its name? Monster Burger. What is it? Beyond Burger. Massive short squeeze potential. Well, I'm going to go over that chart too. GameStop, what can I say here? I mean, you have Roaring Kitty coming out tomorrow with a live stream. It's probably going to go up in anticipation of the live stream. I'd be worried about a sell-off after the live stream. So I'm not a buyer here. I think it's gambling. Whereas so is Beyond Burger or Beyond Meat. Let's bring up that chart. The reason why I like this stock is because of the short interest. It's a meme stock, but it hasn't run yet. And we have tightening Bollinger Bands on a weekly chart. So we have a squeeze set up. Let's go to a daily view. And it's behaving well. And once GameStop, if they continue this rally on GameStop, well, money's going to find its way into cheaper stocks. And they're going to get squeezed. That's why I bought this one rather than chasing GameStop. So it's a gamble, but it's only a small amount of capital, and that's it. Oh, yeah. Oh, I thought you were talking about something else. Very true. In remembrance of our fallen warriors on D-Day, God bless them. May they rest in peace. And everybody have a profitable trading day tomorrow and a great weekend. Like, subscribe, hit that dingy bell. Don't forget my 5-part video tutorial on my top 5 favorite candlestick patterns. Get Trend Spider, 35% discount code below. Take advantage of it. Have an awesome night. Talk to you tomorrow. Be well.